No, not me. Okay, let me do this. Yeah. Remote control. Sound. Okay, let me record it and I will share it to you. Ne?
All right, please.
Okay, beautiful. It says I disabled the recording. Yeah.
Yeah.
Can you guys hear me?
Yes.
Very good.
Yeah, we can.
Let me record it. Yeah, let's continue, right? So this candlestick, I repeat again, right? It must break with a full body candle. You see here, when it breaks this liquidity here, to show that we're going to continue to the upside, right? But if
Okay.
it breaks with only a week like this, with only a week like this, right? What does this tells you? It means that they just swept the liquidity and they must go to the downside to sweep this liquidity. And how do we see that? You mentioned the thing of smaller time frame. Smaller time frame. You go to your smaller time frame. What do you want to see on the smaller time frame? On a smaller time frame, you want to see break of structures to the downside, right? Simple. When you see double break of structure to the downside, you take entry on the second one, not on the first one. No, this one can be a manipulation. They can beat you with this one. You see? So double break of structure to the downside, then you execute. When you execute, the market is giving you this, right? Right? When you execute, I'm even teaching you how to put a stop loss same time, right? When let's say you entered on this one, right? You just protect where? Here, not far, here, so that you can use a big lot size. Simple. You see? We're gonna have a practical example on our on our charts, right? So after that, you execute here, you protect here. Isn't this beautiful? This is very beautiful, guys. So let's continue. So if the market breaks with a full body to the upside like this, breaks like this, right? What do you have to expect? You must expect that the market is giving you some things like this, break of structures to the upside. So now I taught you how to tackle two moves. Did you hear that, guys?
Yes, yes.
Yes, yes. Can you guys at least please explain to me what I just said now, so that I can see that we are on the same page. Starting from here, just only here, because this is the point of interest, right? So what did I say here so that I can see that, oh, okay, fine, we're on the same page.
Okay, let me try and explain.
Please, sir.
It's Monga speaking. Ne? So
Okay.
we wait for market. Okay, we indicate we draw a line on the height of London and the low of London.
Beautiful.
Then when New York starts, we
Uh-huh.
wait for the market to see if it breaks the liquidity with a full body candle. That means it's gonna go to the upside. And
Yes,
and
yes,
then
yes.
we're gonna wait
So,
for market structure shift, and
uh-huh.
then we go to lower time frame, and then on the second market structure shift, we take the buys. And then if it's going down, it's gonna break the liquidity with a week.
You see
Then
how,
if it
thank you
breaks a
very
week,
much. Thank you very much.
sorry,
Thank you very
yeah,
much. That's so very beautiful. That's so very
Can I
beautiful.
ask a question?
Yes, yes, please.
Is this all happening on the 15 minutes time frame, the break of structure, where we're seeing like
No,
the full body closure all the week?
so I prefer 15 minutes time frame, right? But
Yes.
mostly it happens 30 minutes, 1 hour, you see, but preference 15 minutes time frame, right?
Mm, okay.
So yeah, yeah. So since we entered here, meaning we're gonna protect here, right? I mean, we're gonna have our TP here, right? Right. So how are we gonna have our TP here? Where are we gonna put our TP when the movement is like this? You see? Let me tell you. So we're gonna
sorry.
look, come again.
Can I ask?
Yes, sir.
You said if it's going to the downside, our TP is gonna be on the low of London, right?
Law of London. Yes. Yes, law of London.
That will
That
be
would
our
be
TP.
yes. And
Okay.
touch the TP, you close, you see tomorrow. Same thing.
All right.
Beautiful. So here,
Okay.
where are we going to put our TP? This is very beautiful. I like doing this. So,
Aren't we gonna look to the left and check for the previous high before this London one
or old fair value gap.
or old favor gap?
So there can be an old fair value gap of 4-hour time frame or 15 minutes up there. So that's where you must put your TP. Because if you don't see any fair value gap from here, from let's say the break here, right? Going to the upside and there's no fair value gap here, right? Meaning, and you see a fair value gap here, you put your TP here. Or the high. If there's any other high of yesterday, hey, this is nice. There's a high of yesterday. Yesterday, the market was moving like this and it created the high like this. You can put your TP here on this high here. If there is no fair value gap here. Right?
Okay.
Yes.
Thank you. Thank you. Very beautiful. So this is how you can tackle this 100 always. This, whatever happens here, is a vice versa of here. You see?
Mm.
So market-wise, on market-wise, we teach you to be market-wise or like to be wise on the market. I want you to understand this. Because you can tackle any movement here. You can tackle any movement. For example, right? Let me clear this chat so that you can see what I'm talking about, right? We have a point where the market moves like this, like this, like this, like this. So when the situation is like this, what do you do? When the situation is like this, right? Simple. You mark out your high of London. Okay, this is my high of London. This is my high of London, right? So this is obvious that after breaking the high of London, if the market makes a okay, let me get this. If the market continues going to the upside like this, right, where London does not go to the downside, I mean, where New York does not take the low of London and every session is expanding to the upside, right? What do? The market must give you 15 minutes time frame. I mean, 15 minutes fair value gap. So you see 15 minutes fair value gap here, right? During the New York session, right? You see 15 minutes, you wait for the market to touch inside the 15 minutes, you enter your trades. You enter your trades or you go to 1 minute so that you can have a beautiful stop loss. Because it is obvious that after we entered inside this 15 minutes FVG, we're gonna have what? We're gonna have a double break of structure to the upside. Then you enter, you protect here, you go with the market to the upside. What do you aim at the upside? Old high, old FVG.
Old FVG.
Come again?
No, I was repeating what you're
Yes.
saying. We aim for the old FVG or the previous high of the previous day.
Beautiful. Very beautiful. So you see, with market wise, we can tackle any movement. And
yep.
The thing I like is that you do not need to trade every day. If you see the market and the market is confusing you and you see, hey, I marked the high and the market does not take the low, go to down and do this, and you just leave the charts. This thing they will appear always, every week, like always, right? So I'm gonna give you this one. You will have this one, right? Let's talk about double highs. Please have patience. Please. I know I talk too much, and please let's have patience and you'll see. So we have what we call double highs, right? And having double highs, we have something like this. Double lows, they can be relative. Relative meaning they are not equal, right? So I want to show you this, right? So these ones you see they're not equal, we call them relative highs, or we can say double highs. You see? This one we call them double lows. This one are equal, you can say equal lows. You see? So this is another movement that is very beautiful and nice. And this week, if you go to 1 minute time frame, happened again and again and again. You see? Nice. How do we trade this one? You wait for market to sweep these relative highs. After sweeping these relative highs, anytime you see them, just know that we have mud. Sweep relative highs. I'm sorry for that one. After sweeping relative highs, you go to your smaller time frame, right? Going to smaller time frame. What do you want? Double breakout structure. 15 minutes. I mean, 1 minute. A fair value gap. This one we leave it to enter on this one. Simple. Same thing even here. Same thing. You see? Okay, let me continue with this slide. Same thing. I can draw very clear things, very beautiful things. I hope we understand each other when I say it. It's just these are just the regular structures to the downside. You see? So how do we execute? We leave this one because we execute on this one. Okay, nice.
It's on the second FVG.
Yes, on a second FVG. You see? Then you go to the downside in the market. How do you execute on this one? Same story. On the second FVG, right? You go with the market to the upside. You protect here. So you see this pattern. You can only trade this pattern when it happens. Always you trade this pattern and you will make enough money. Just this by you.
Is the time frame still 15 minutes?
Yes, 15 minutes. Or if you want to see them clear, let's say on 15 minutes they're not clear, you can even see them on 3 minutes. If they're there on 15 minutes, it's obviously sure they'll be there on 15 minutes. So, on 3 minutes. 3 minutes, we just like them because they will just expand, you see? They will expand like this. On 15 minutes, they can be like, for example, right? Let me do this. They can be, for example, I'm making an example. Never be confused, right? Please. They can be like this. Let's say this is 2 candlesticks of 15 minutes, right? And they are equal. They're equal like this, right? They're equal. Since they are equal, just know this. Okay. They are equal, right? When you go to 3 minutes, this candlestick, they will expand and they will give you beautiful equal highs. You understand what I'm trying to say? Or let me not confuse you. Let me not confuse you. Or still you can have the bigger ones. Bigger ones, what I mean is, let me show you this. Again, this is still 15 minutes. Even 15 minutes, they can be like this on 15 minutes. And just know, the more, if they are big like this on 15 minutes, the market will distribute too much to the downside, right? Wait for it to be swept to this, right? Otherwise, this one's like this one, you just go to a smaller time frame, 3 minutes, you're gonna see them, they will expand and it will be beautiful. I hope you're not confused. Are you guys confused or you are with me?
No, with you.
Are we we're fine, eh? You're not confused. I did not confuse you with this, eh?
No.
Okay, beautiful. That's what I like. So simple. Let's go and back test on the market, right? Right.
One question before we go there, Mr. Rory.
Yes, sir.
So the take profit, we're gonna use it the same as the first example that we used.
Yes.
Okay.
The swings. Cool. Liquidity, right? Those are gonna be your take profits.
All right.
So let's go to what do we call this? Let's go to the market, right? Let's look at this. Let's back test this Friday movement. I want to show you everything we spoke just a few minutes ago. I want to put them here, right? Let's back test this, right? So what do we see here? Where is the high of London? Because if we were to check, New York started. Come again?
No, you can carry on.
Oh, okay, no problem, no problem. So New York started by 9 o'clock, right? This. So London, it started by 9 o'clock. Please, I'm sorry for that, right?
Sure.
So New York, it started here, right? But listen to this one. I don't want you to be confused. It starts here, but we start trading at what time? 4:30.
4:30.
Why 4:30? Because the stocks open at 4:30. You do not want to put a trade before 4:30. Why? Because the stocks, they might come up green, red, green, red, green, red, green, red, meaning the market will do what? Will just move like this, clearing all the stops. And you'll be like, yo, the Rory, and after you see the Rory posting results, and you'll be like, yeah, no. Okay, let's continue. So let's mark this high, right? After marking this high, I want to show you something. What did I say? What did I say about bigger? Okay, can I please? Okay. What did I say here? I said this kind of thing must close with what? Full body.
Full body, yeah.
Beautiful. After closing with the full body, we go to which time frame?
1 minute.
Beautiful. Let's go to 1 minute time frame. I enjoy doing this. Okay. My network is speaking on me. I don't know. Okay, beautiful. Here it is. To show that we're gonna go to the downside, we must have what?
Awake.
Come again?
Awake.
We must have double break of structure to the downside to show that the market will go to the downside. Right?
Okay.
Do we have double break of structure to the downside?
No.
So
No.
how do you execute on this fair value gap while we don't have a double break of structure to the downside? Because there's no other, like, you understand what I'm trying to say? We only have this fair value gap here. How do we execute here? Does it make sense now?
Yeah,
What did I say? I said for you to see that we're going to the upside, you must have what? To the upside, double break of structures to the upside. Look at this. First one, second one, third one, and okay, I hope you can see my screen, right? I want to show you this. Can I view this in a nice way? Let me do this. I will reset my chart. Let's mark the first break of structure. Market went to the upside. First break of structure. 1. Okay, this is nice. 2. All right. And where's the other one? We have this family gap, this family gap. Oh, this one. Yeah. 3. So you see how many confirmation did you have? The market gave you more chances to enter. Look at this. 1, we leave it. Strictly leave it. Why? This can be a very big trap. You enter here. Enter where? Enter here. Enter here, you don't protect far, you protect just here. You see? I said, what do you mark? Are we together, guys?
Yes.
Yes.
What did I say? Where did I say we put our TP?
Stop. The previous high or FEG.
Or the previous for our FEG.
Beautiful. We're been testing, right? Let's go to our beautiful. Okay, let me close our indicator so that things can be, so that we can see clear. Look at this, right? So the market from here to here pushed inside the LVG. And what I like the most is that, right, guys, let me teach you something, right? When you enter your trade here, this is clear on 1 minute, right? And look at this movement, it's so small, right? But with on 1 minute, it's a very big movement because why? I teach you how to use big lot sizes, right? So by entering here, right, you aim here, this FVG here, you put your TP here. The 50, I like it when you put it on your 50% of FVG. 50%, don't be too greedy and put it on top of on a closing of an FVG like this. I know it reached there, I know. It closed, it filled the whole FVG, I know, but at least put it on 50% so that you can be on the safe side. You see? So after hitting our old FVG, what happened? Oh, this guy is really clapping hands. And oh, wow, no problem. So after hitting the 50% of FVG, right? To show that we're gonna go to the downside, what do we wait for? Back to 1 minute time frame. What do we wait for, guys? To show that we're gonna
Double break of structure.
Double break of structure. Let's search our double break of structure here. After doing what? Hitting the 50%. Look at how many the double break of structures we had. 1, 2, look at this. 3, entered here. The market went here, took you out, right? Kept on giving double break of structures to the downside. Look at how many entries. Even this one should have taken it. This one here is a fair value gap. Even this one. So you see how many entries did we have here? 1. Okay. 1, 2, 3, a successful increase. And mind you, the way I teach you how to put your stop loss, if the market, I want to tell you something, right? The way I teach you how to put a stop loss when you see what double break-off structures, right? If the market touches you out, let me remove this. Let me remove this screen hotwire so that we can see. If the market, let's say we entered where, let's say you sold here, 1, 2. This one we can't take it because what, the market never entered inside it, right? Right.
Mm-hmm.
Let's say you took this one, right? You don't protect far. Where do you protect when you take this one? Where do you protect when you take this one? I'm asking.
Look, on its week,
Which week?
just on top here. Where you had a cursor. Again, there's a first candle that makes okay, let me put it this way. There's this candle of a FEG that
Yeah.
just on top of it.
Oh, here, no, okay, fine. Let me fix this issue of stop loss, right?
Okay.
When you protect here, let me show you this. Where is that thing to the brush? I wanted the brush. So let's look at this. We want something like this, right? This is our double structure, right? Meaning we utilize which one?
Mm-hmm.
Which entry do we utilize? We enter on
The
the
second one.
here, right? Beautiful.
Okay.
Thank you very much. Enter on this one. By entering on this one, where do we protect? We protect here, here. The reason the market went to the upside here is because we had a fair value gap here. We know, right? The reason the market came here is because we had the fair value gap here. You just protect here. You understand, or do you guys understand what I'm saying?
Yeah.
Beautiful. So let's come here, right? I want to show you something. I want us to be together on this one. So we had this market going to the downside, upside, right? Downside. We had an FVG here. It entered a bit, coming in too much, inside an FVG, went to the downside. Look at this. Entered inside this FVG, went to the downside, entered inside this FVG, and went to the downside, right? I'm going to take this thing, put it on a side so that we can talk. Beautiful. Look at this, right? So, meaning we had first break of structure, right? As which one? Yo, I took this thing 2 up, but no problem. Let me just mark it. At this one, and we had an FVG here, right? These people are making noise, but I don't have to. So, yeah, right? And we had this FVG here, which the market touched a bit and we did not enter because look at this here. Let me zoom it. Look how the market touched just a bit inside it. Do you see this?
Yeah.
Me here was not gonna enter because I wanted the market to touch so that I can have confidence. You understand? Beautiful.
Okay.
So after that, right, it broke the structure until going to the downside. The one we utilized is this one. Meaning is which one? This one here, right? So entering on this one, right? Where do you protect? You'll be forced to protect here on this FVG, right? Simple. So let's say we enter here, right? You protect here, you see? Thank you. So let's say you entered on this one here, right? On this FVG, and you protected here. Look, before they distribute to the downside, they went for what? All the stops. But here, safe, you see? But no problem. You left this trade to slide. You entered on this one, right? It took you out. After taking you out, it keeps on giving you what? And mind you, this stop loss is very small. This stop loss from here to here, it's very small, right? Meaning, even if it touches you out, it don't touch you out with too much money, right? Beautiful. Never be greedy. So let's look at this movement here again. The market kept on giving us what? FVGs. These FVGs are too small. I don't know if you will be able to see them. Or, okay, let me refresh this market. Can you guys see in this FVG here? Where the market came, this one here.
Yeah.
Beautiful. You enter on it, right? By entering here, what do you protect? Yeah.
Yeah.
This high here, right? And when the market distributes to the downside, the market is with you. Make enough money. By entering here on this FVG, you'll be forced to protect where? On this one here, because of this FVG.
No.
You see?
Yeah.
Yes. And to show that we're going to the downside, break of structure, double break of structures. Isn't this very nice? This is very beautiful.
Yeah.
Go back to 15 minutes time frame. We're pushing, we're working here. So back to 15 minutes, what time frame, right? Let's open there. Okay. Beautiful. 15 minutes time frame. Let's leave this movement. Let's talk about this one here. What did I say? Remember what I said. When you're approaching what? New York session, mark the high. Speaking, one of the best.
The Rory.
Okay. You mark this low here, right? Look at this. We had this low of London, but look at this pending low, which is liquidity here of Sydney. Do you guys see this? So
Yes.
this low, this is a pending low because the market did not touch inside. The market did not sweep this liquidity here, right? Right. So look at this. Look at how it closed with only a week. You see, if you don't want to take this thing off a week serious, you can go to what is this? You can even if it close, you can just use double break of structure. You see double break of structure to the downside, you'll be like, that's it. You see? So let's go to smaller time frames. Look at this. Look at this. Do you see this, guys? So
Yes.
you see how this market is not perfect. What do I mean when I say it's not perfect? Just look at this. It gave you break of structure, it broke here, went to the downside, another EVG to the downside. Let me take this on the side so that we can see how this is too boring and not nice. So look at this, right? You'll be forced to enter here, right? Why? Because you don't want to be left out, right? When the situation is like this and your stop loss is too far like this, what do you do? What do you do, guys?
You leave it.
If you do not want to leave it, what do you do?
Previous high.
You listen to this one. You reduce the lot size. You see, why are we reducing the lot size? This is too far. This is very far. So meaning here, at least you reduce the lot size, you protect with a reasonable amount, and you enter your trade. You make that R1,000 for a day, then you are fine. This is what I'm trying to say.
Okay, makes sense.
It makes sense, right?
Yeah.
Yeah, it makes
Because
sense.
imagine if you enter with a big lot size here, and look at this FVG, it's too big, and there's another one here. This market, the way this market is crazy, can push until inside this FVG, and mind you, you enter with the big lot size here. You see what I'm talking about? Yes. And the next thing, you're starting to have hope. You're hoping that this market can go to the downside. I hope this market can go to the downside until you lose the account. You see? This is my nice, very beautiful. Now we all know how to tackle New York, right? Can we have questions before we talk about currency strength meter? Are you guys fine with this?
I have a question.
Okay.
On that market of Friday, ne?
Beautiful. Let's talk about Friday. I think we must create another link because this one will log us out now. Please don't forget. I'm gonna send another detail so that we can log in, right?
Okay.
Okay, beautiful. Thank you.